I was wrong. So very wrong. Did the IMF get to me? Am I going to backtrack on yesterday's video? No, I wasn't wrong about that. That video was not an attack on a lifestyle choice. It was meant to shed light on why American companies are doing what they're doing. Brands like Target, Bud Light, Kohl's, and North Face. They're being manipulated by powerful people. It isn't a movement. We're talking billionaire globalist elites seeking to take control away from American brands, American corporations, with what I believe to be a long-term goal of putting each and every one of you under a social credit score to control what you do and to control what you say. And then they're going to take away the cash dollar, which is a tool of freedom, and they're going to force us all to use the FedNow digital dollar. But those are topics for another video. Let me know if you guys would love for me to break that down in the future. But for today, I'm going to be talking about some things I got wrong. This is the Stocks with Josh show. Got a ton of interesting comments on yesterday's video. Thank you guys for sharing your thoughts with me. I appreciated all of them. Some of them were hostile, but that's okay. I love it. I love you guys, and I love the dialogue, and I love free speech, which is what we're enjoying here on YouTube today. Thanks for all the likes and the new subscribers that joined. I couldn't tell if I lost anybody because we definitely added to the family. Today, I'm going to be talking about my mistakes in the charts. There are some technicals that I gave you guys on some stocks that people love that were just plain wrong, and I'm going to give you guys an update on that today. I'm going to cover those in just a minute, but I have to talk about the debt ceiling crisis. Well, I think the debt ceiling crisis is over and there was no sell-off. Matter of fact, the markets were heating up today. The debt ceiling deal favored the Democrats. We know that because there was more Democrats agreeing to sign it than there were Republicans in the House. It went to the Senate, it got passed right away, and the president will absolutely close the deal. When the negotiations began between the two parties, the Republicans wanted a 20% cut to spending. They ultimately did not get any cut to spending. All that they got was at least a 2-year freeze on spending increases. That's not what they had originally wanted, and you saw hesitation in the voting in the House. But this is a done deal for now, and one of the takeaways I'd love for you guys to see is that both the Republicans and the Democrats will always get along and agree on spending your money. That to me is a fact. It was a green, easy money environment in the market today. You could have thrown a dart to pick the best big tech stock to invest in and you would have made money. I'm going to cover some of my hottest plays and some areas where I took profits because it was a big day and it might be time for a cool off. All right, let's start with the SPY. I just showed you guys in a video this week that key support was at 415. We've skyrocketed to 428 and it seems inevitable that we should hit 430. But there will be profit taking right at or below 430. I wasn't wrong on the SPY setting up for this move and finding support at 415. There are so many juicy wins to cover this week. I feel bad that I can't get to them all, but let's touch on the EV space for just a moment. Tesla, NIO, liauto, and ChargePoint. I'm going to go and give you some quick technicals in this area. Tesla. I literally came out here day after day and told you guys what Tesla was going to do next. I made a ton of money. This was my biggest win for the year with Tesla stock and options. Many of you guys followed me and you guys have been enjoying some fat gains as well. I said that Tesla would hit 215 and today it hit 217 and 25 cents. 215 though is heavy resistance, so I could expect it to sell off below 215 going into close. I locked in profits on my calls, but I'm holding my stock with a trailing stop loss. Right now, my biggest goal is to protect my gains and take profits correctly. I've been in this since $153. But like I said, Tesla has confirmed a bigger move higher to 225 to 228. But it's going to have a volatile ride between now and there. Key support is at $211, so a back test to 211 would be very, very easy, but we are in a momentum move, so it could also pop up to 220 just as easily. So everything that I gave you guys up till now, in my view, was easy money. Now we're getting into the tricky spot of trading. I want some of the more experienced traders out there to leave me comments on what you think the gameplay is going to be on Tesla. I'm curious what you guys think. All right, NIO. I'm going to be keeping my commentary very simple. I was also completely right about NIO. I warned of a breakdown if NIO couldn't hold $9, which it didn't, and it got as low as $7.68. Here's what I like about NIO right now. I want you guys to check out this RSI, stands for Relative Strength Index. Strong, very strong bullish divergence in the charts. That's when the price continues to fall, but buying momentum goes higher. Or you could say that the selling momentum decreases. Basically, the RSI measures momentum, and it shows that even though the price has fallen, it's fallen on lower and decreasing selling momentum. So what are we looking for right now? Well, we're looking for a break above the 50% level on the RSI. That puts NEO into bull territory. Right now, it's in the bear territory trying to break out, and that's the confirmation that we need to know that it's going to go higher from here. What I think NEO could be doing right now is a back test to $9 and then $9.50. That would be a 35% gain from its recent lows. Full disclosure, I am not in NEO right now. I'm simply giving you fresh technicals for all of those who are. I am, though, calling NEO a buy to $9.50. Quick warning, if NEO fails to break over $9.50, then I think it's going to drift back to make a new low, with the target being $6. That's a price target that I gave on NEO over 6 months ago, and we have come extremely close. All right, let's look at ChargePoint. My technicals have never been wrong on ChargePoint. Don't worry, guys, I'm going to get to my bad technicals really soon, just bear with me. ChargePoint, in my view, is going to $11. It's got the same bullish divergence as NEO, but in the RSI for ChargePoint, we've actually got that break above the 50% level, giving us a confirmed bullish move. The stock recently hit a low of $7.80 approximately, and if we got up to my target, that would be a 40% gain from those lows. Now, there is still meat on the bone for ChargePoint. Liauto, now this is an interesting one, and it's one that we got to talk about. It's a little bit harder to read the charts on this. In a past video, I defined the trade range for Liauto as 18 on the low to 32 on the high, and you can see that that has played out perfectly. We are now nearing the top of the trade range, so perhaps there's only scraps of meat left on the table for Liauto. For me to change my view, I'd have to check the charts to see what they do when they get to $32. That's a key level of resistance. There's only a 3% move left on Liauto. If you're in Liauto, yet again, like Tesla, I want to hear from you guys this time. What do you think Liauto is going to do when it gets to 32 bucks? Is there a bullish case for Liauto to go higher? Before I get into the stocks that I was wrong about, check out this new offer from the moomoo investment app. They're giving away up to $100 cash, 16 stocks, each of which could range in value from $3 to $2,000. Nobody's ever told me they got the $2,000 stock, but a ton of you guys have told me that you got a share of Apple, which I think is really cool. Plus, right now, for a limited time, they're giving away a bonus share of C3AI. You can click on the link in the top pinned comment to get all the details of their offer. If you are able to get a moomoo account, then come find the chat group that I host on the app. I call it Stock Josh Fam. Okay, the stock I was wrong about, you guys probably can guess it. SQQQ. This is an ETF that I was wrong about. My technicals were right and my plan was right, but I didn't listen to myself and I backed myself in the corner. If you guys remember, I called this a buy when it was 28 and I said I had a stop loss of $27. Well, I changed my stop loss and I decided to increase my position and add as it dropped. I did expect it to drop once 28 didn't hold. My main thought was that the volatility that the debt ceiling crisis could bring might crash the markets. It might create a crap show, as you would say, dropping the markets up to 20%. But as you can see, that simply hasn't happened. Now, I have set a hard stop loss on my trade right now at $21.40, and it hasn't broken. I think, though, that it will get triggered. And I bet that we are going to see $20 to $21 range. And I think we're going to see it around the time that Apple hits a new high. And then it would be just as easy for Apple to begin to sell off and for the SQQQ to run up to 30 bucks. If I had accepted the $27 stop loss, I could have gotten in at 22, which was my target, averaged down to 20 and had tons of safety in the move up to 30, but I didn't play it the way I said I should have played it, which just shows everybody the example of how important sticking to your game plan and having stop losses are. I'm not done with SQQQ. I can jump back in if I get kicked out. I haven't been kicked out yet. I will jump in. If it breaks down, I will load up the day that Apple hits my target, which I've given you guys. I will load up right there with call options, not shares this time, for a potential strong move up. All right, another stock that I was wrong about, Sofi. I wanted to buy SoFi below $4, and that was my target that I gave you guys. I did, though, say that SoFi was not looking bad to me, and that even though I had not traded it much in the past, that I was going to take a position because I saw a bullish end to SoFi moving forward, that it would run up to at least $7.50 to $8. But $4 was just simply way too conservative. Now, I have to admit that I saw that when it bounced off $4.45, that gave me a confirmed bullish signal. And then again, when it broke above $5.80, it was a second bullish signal because it broke above another critical level. Having said that, right now SoFi is at the top of the channel that I drew, so I could see it pulling back. I'm going to see support at $6.50, and then a little bit more conservative support is $6 beneath that. What I want to see SoFi do right now is I want it to confirm a reversal by respecting this long-term trend line that I've drawn. I want to see it come to that trend line and bounce. If it breaks that trend line, the upward move, in my view, would be in question. The bottom line is I should have jumped into SoFi at $4.45. What was I thinking to miss that opportunity? I knew better. Okay. Another stock that I was wrong about was Riot, R-I-O-T. I had a hard time believing that $10.50 would be the final support, and I kept waiting for a pullback to $9.68. But remember when I kept saying that it was showing superior relative strength? Well, that's exactly what it did. It never broke the $10.50 price point. Riot is looking good right now. And if Bitcoin breaks out, there is no reason that this thing will not shoot up to $15. Final thoughts on these markets going into next week. It's been an easy money environment so far this year, and I think that will come to an end. The stock market is in a clearly defined upward bull trend, but it's not going to go straight up. That's the concern. We are going to get a pullback, and we have to begin to take profits. We have to lock in some of these amazing gains that the first 6 months of the year has given us. And we've got to consider that they're going to come back and they're going to test some support and then move up from there is what we have to consider. The biggest problem that we have right now is the fact that there is no breadth to the rally. It's been exclusively propped up by big tech. I've been saying that in almost every video for the last month. So one of two things is going to happen next. Small caps are going to catch up, pushing everything higher, crushing and skinning alive the bears, or big tech is going to cool off and sell off. You might have missed a lot of the action in the markets in recent days, but you're getting set up for another opportunity. One of the biggest lessons, even from today's video, is stick to your game plan. Just because the markets have been pushing up, a lot of you guys are going to get squeezed out of some of your bearish plays, only to see those become profitable in the next couple weeks. I cannot tell you that that will happen for sure. I can only tell you that the trend right now is bullish, and we have to continue to trade the bullish side until we get a reversal confirmation. Guys, thank you for all the likes. Thank you for all the subscribes. As always, peace and blessings. Enjoy your weekend. My very next video is going to be a crypto video. I think it's important. Don't miss it. Take care.